right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Dr. Go, like Ray J, I hit it first. All right, Dr. Go, welcome in, man. Thank you so much for being here. Samuel S44, Crypto Wanderer 5813, R Pink. Thank you guys all so much for being here. Thank you for modding for me. Thank you for the support and smashing up the like button. Guys, please do hit the like button if you do get any sort of insight into the market from this live stream. I appreciate all of you guys. Adam Thomas, what's up, man? Good to see you in here. User BDC, thank you for coming in and joining the crew. And yeah, Adam, you're short from 65,420. Man, that's awesome. Awesome entry. I'm short from around 65.2. And good job, man. You know, we knew that this purple box of resistance was going to be a major area where we could see a harsh rejection from. And we are starting to see that rejection. Eric and Peoria Beat, Wayne Neurosi, good evening to you guys as well. So yesterday in the video and throughout the week, we've been talking about this impulse from Monday's lows. Multiple 1-2 impulse, 1-2, 1-2, 1-2. We got our big push up in a third wave, and then we needed to see some 4-5s, 4-5s, 4-5s coming in. We hit that liquidity from Monday, June 22nd. Yes, technically we took the liquidity, but it was very, very poor, shallow SFP. But I let you guys know that I was really looking to short at that liquidity zone up to about the weekly and the naked weekly point of control about 65.7. As we were coming up there, first off, we were forming bear divs on multiple time frames, and specifically the 8-hour time frame looked very, very ominous for a short, at least a short scalp. You can see multiple drives of bear div, multiple drives of bear div, money flow bear div coming in as we were coming up into our box of resistance. If we go down to the 4-hour time frame, on the 4-hour time frame as well, we saw the multiple drives of bear div, money flow draining out of the asset on Market Cipher, multiple drives of bear div, and money flow bear div coming in here as well. So that's why I was looking for the short up there. Another reason we were looking for the short is because the impulse from Monday's low, we were looking for it to end. And really, in the most bearish scenario, we could be looking at a ABC, an A wave to from 57.7 to 64.2. A B wave and a running flat, and then your C wave, really the minimum target is taking out your A wave highs, and we did that. We came up to our first box of resistance. Now, in yesterday's videos and in the live stream on Tuesday, we were talking about this channel in here and how this channel, we needed to see that kind of buying exhaustion channel. And in yesterday's video, I let you guys know, if we start to lose that channel, then I think we could see a bigger dump to the downside and potentially come all the way down to 62.5, you know, to 62.2. But you can see here inside that channel, we broke it to the downside. We bearishly back tested that channel. And then that's when we saw our big drop to the POC. Now, so far we're holding around the POC, but even after bouncing from the POC, you can see we bearishly back tested that value area high, confirming re-entry back with inside this 10-11 day volume profile, and now we're dumping here. So because we bearishly backtested here, I posted in the Telegram this morning, guys, we could see new lows coming in, new local lows below the low, these two local lows here coming in, and we could drop pretty aggressively. Because if we do look at this 4-hour time frame, you can see this big fair value gap that was created in here, this huge candle, this 4-hour fair value gap. And if we start to lose the POC, we could see a quick flush down to that value area low, which is also where our daily, our anchored VWAP is. And yeah, it could be a pretty aggressive flush down here, guys. So far on the 4-hour time frame, you can see we're only seeing wicks past the POC, but overall it's still trying to hold as support. So let me go ahead and get rid of this small channel. That's been kind of used up. We saw the choppy overlap here, suggesting that this impulse from Monday could end. That's why we were looking for the shorts. We saw the bear divs for confirmation, took the short there. Now we're looking at a couple other things here. First off, on the daily time frame, let me zoom out to the higher time frames. On the daily time frame, like I said, our most bearish scenario, this high at 65.5 could be the high, and we reject to take out 57.7. That is our bigger parallel channel to the downside. We got that initial aggressive drop, and now we're starting to see selling exhaustion on the daily time frame, but that doesn't mean we can't make one more new low, macro low, and then see that exhaustion finally finish and that expansion to the upside. So we're rejecting from the top of the channel. You can see how perfectly we hit the top of the channel within that push up from Monday, within that last push up, and within this kind of sideways 3-wave move so far. So bearish case scenario, if we take out our lows from Monday at 61,750, because remember, this is a running flat in here. And if you take out that running flat low, Monday's low at 61,750, then we could say, hey, maybe this entire push up from 57.7 is done with as a corrective move, a 3-wave corrective move with a flat as a B wave, and you are going to come down and make new macro lows. Now, in the bullish case scenario, we are also looking at, well, first off, okay, so that is our bearish case scenario. Now, to support that bearish case scenario, we saw our initial aggressive pump on the daily time frame, 7 green candles in a row, and then we started to get that buying exhaustion channel. So I'll go ahead and I can turn on that buying exhaustion channel for you guys, and you can see that we had that buying exhaustion channel. And I will make that channel a different color so it's easier to kind of see. But you can see here, we also rejected from the top of that buying exhaustion channel. And if I zoom in onto the 4-hour time frame, you can see that buying exhaustion channel here in blue. We are rejecting from the top and we are working our way down. And yes, it is only Thursday, but if we work our way down throughout the weekend, all the way down to that value area low, you can see that we would be coming in Monday, Tuesday. Your channel support would be around your green box of support where your daily and your value area low is. And then we might see one more bounce to finally come up and take out 65.7. Now, I do not like the one thing that's keeping me from really thinking this thing is going to roll over here and dump really aggressively to take out, you know, even your 61,250 lows is that high. It's a double top, guys. It's a double top with that liquidity. If I throw on that liquidity on Coinbase, it's at 65,553. And you can see here, let's just go ahead and throw on yesterday's high, 65,559. So it's only like a $6, less than $6 high above that. So technically, yes, it is an SFP. But generally with an SFP, you want to see a wick of like $100 or $200 above that liquidity level to actually stop out those traders that give a little bit of breathing room. Anyone they shorted in this area would put their stop above that high. So yeah, we have taken a majority of the liquidity. We looked at the liquidation heat map. The liquidation heat map did show us that we took most of that liquidity. And after taking that liquidity, we are seeing that pullback right now. You can see all that liquidity has pretty much been taken. Now there's some brand new liquidity up there from people like me and Adam, who shorted 65.4, 65.2, but a majority of the liquidity prior has been taken out. Okay, let me go ahead and clean this chart up just a little bit, and let's look at our larger sideways range. We have that larger sideways range that's going on about 6 weeks now. It's from June 3rd, June 4th. You can see we are coming down also to the POC of that range. The value area high of that range is also very similar to our 9-10 day long value area high, just this smaller range in here. And so we're falling back inside the volume profile. We bounce from the POC. After bouncing from the POC, we come up, we bearishly backtest that value area high. And if we start to lose the POC, guys, we could see a quick flush down. So far, we're not losing it completely yet. So there is still there is still hope for the bulls to continue locally up here and to, SFP the double top into our weekly level. Remember, we do have that weekly at 65,700. We also have the naked weekly point of control pretty much at 65,700. And it would be nice to see another SFP of yesterday's highs into that weekly level. So I will be watching for that still, guys. Let's actually go ahead and do this. Let's set an alert on this high from yesterday. And if we do get the SFP short, I will end up taking that because we still do have continued bear divs on the chart for pretty much the 8 hour and under bear divs. Okay, and then let's go to the daily time frame. Now, on the daily time frame, our money flow still looks pretty good on Market Cipher, but we're looking like we're topping out on the momentum wave, and I've seen this so many times where this momentum wave keeps extending like this, you generally will see a pretty aggressive drop after it finishes. You know, keeps extending, aggressive drop here. And then if we look at NAMI, what we're seeing on NAMI is 2 red dots on each of these. You know, we got a red dot here, we got a pretty aggressive flush down. We got a red dot here, we could get that pretty aggressive flush down, at least to 62.5. You see both of those red dots in there. Money flow has also started to top out and start to curl over and move to the downside here on NAMI, which is a little bit scary for the bulls. Okay, so yeah, I mean, for me, I'm still being cautiously optimistic as a bull. I still have some of my position open from 58.2. I've added to that one time and I've taken 3 profits on that now. But I am going to hold this short from $65,200 and I still have not taken any profit on it. Still have not taken any profit. The very first take profit I will probably have on that is coming down to this green box of support, because this could be a swing short opportunity to take out 57.7. Now, if we do come down here and start to bounce, I'll probably pull out 50% of it right away. And then if we see a bounce from there, we could look to add to the short. If we start to reject from that POC again, we could look to add to the short and maybe see this thing finally roll over. But I also want to talk about one other thing. So you guys know on the channel that we often look at USDT dominance as kind of to get a bias on what Bitcoin is going to do, because they're inversely correlated. Let me just zoom out onto the 8-hour on USDT dominance. Now, we've been looking for this last 5th and final wave of a breakout. We were looking at this being a wave 4 pullback to bounce from your naked weekly point of control in your daily level. And remember, there was that channel in there that we bounced from the midline perfectly. And we were looking for an impulse to take out our 9.5% double top. And that double top is from our prior bear market. Pretty much a double top in there from your prior bear market. Well, you can see we came up and we front ran it. And we're seeing a bit of a pullback here. We front ran it twice, once here, once here. We're seeing a bit of a pullback. Now, what we could be looking at up in this area here, above the value area high of this range goes back to February. So, you know, past 4 or 5 months here. This is really looking to me like some sort of flat in here. You got the B flat, which took out your A wave highs, and then we would need a dump here on the C wave to take out your A wave lows. And then once you do that, you could see that last push up to double top that liquidity. And then depending on how high we go, you could see a very aggressive dump in USDT dominance, which means Bitcoin would be pumping. But let's talk about that. If we're expecting this move here to take out your lows, your A wave lows at 8.149%, we're not quite there yet. That means USDT dominance is dumping, should continue dumping a little bit. That means Bitcoin could continue pumping a little bit. And that is giving me a little bit of a bias that, yeah, maybe we can hit that 65.7 or even the 67.3K highs. And to me, that would be a better overall short when we're looking at kind of what we're seeing in here. Let me just hide some of this, clean some of this up. Actually, we'll go to our index chart. When we're looking at this move in here, we want to see if we can take out that high at 67.3. That would technically be our first real big market structure shift on the daily time frame, right? Because we have our lower low, lower high, lower low. If we can take out that 67.3, it would technically be our first major break in market structure. It would be a higher high. Because of that, we could expect a higher low, and then we would get that very nice accumulation pattern, right? Tap 1, tap 2, tap 3 accumulation pattern. And or inverse head and shoulders, if you want to call it an inverse head and shoulders, that's a bottoming reversal pattern. We do have the bull divs on the daily and the weekly time frames. So that is still a possibility to me, and especially looking at USDT dominance. The other scenario is that we are going to reject from where we are now, and we could create that model 1 accumulation where it's going to be another low within the channel, and then you have your tap 1, tap 2, tap 3, and then we get that expansion to the upside where we could break up, you know, even back up above 82.8. And we have some time. We have some time to wait for. So we're looking at the major trades that we can take within this range. And We knew that the major trade was at that naked weekly point of control at 57.9. We had the bull divs on the chart. We've ridden that up to our first major box of resistance, which was that 65.2 to 65.7 box of resistance. And if you guys didn't catch the short from 65, you do have some possibilities of seeing some double tops in here. Or like we can even play this small 15-minute range. You pull this 15-minute range in here. We're unfortunately below the value area low of that range, which is also going to be where your VWAP is as well. So you would have to look at scalp trades, and the scalp trade, you would leave some of it open to maybe turn into a bigger swing position, but you can look at the bearish backtest of that value area low. If you reject that, you're going to expect continuation down. And once again, like I said, this is all a big imbalance in here. So you would probably flush down through that pretty quickly. Or if we can get back inside of the volume profile, then I would not only be looking at coming up to the value area high around $65,000, but I probably would be looking at taking out that double top and then seeing the bigger flush down. Okay, let me check the chat here real quick, guys. Welcome in, everybody. Thank you so much for being here. So close to my stop loss. Okay, your stop loss on a long position, I assume, Peoria beat. Good afternoon, Ryan Henson, Stephen Dinges, good afternoon, and Eric, good afternoon to you guys, or evening, or morning, wherever you're at in the world. Our Pink, much love to you, man. Bybit POC also at $62,500. Yes, the Bybit POC is at $62,500, and we talked about that in yesterday's video as well. And now that Bybit POC, it's of your 10-day long range. Actually, let me just zoom out here to the 2-hour time frame. Your 10-day long upper range in here, you can see that POC is coming in there, but also your 6-week long range, you can see that POC is coming in right in that zone, right? 62.6 to about 62.4 is a bunch of volume support. And remember, volume and liquidity are the most important levels on the charts. So we have multiple volume support levels down here, as well as that 786 Fibonacci and a daily level. If we pull that Fibonacci from the high, the lows of the impulse to the highs of the impulse, and we throw on that 786, you can see that 786 is coming in right in the middle of that, and then the daily level. We were talking about seeing a possible retracement because when an impulse ends, you often will get a corrective move down towards the golden pocket or towards the 786. And then if you bounce from that level, you could expect new highs to being made on the chart. So yeah, I mean, to me, I would not be surprised at all if we come down to 62.5 and then we still continue this overall grindy uptrend in here. But it is getting concerning for the bulls because the bulls, in some ways, I don't want to say they're wasting the daily bullish divergences that we're seeing, but we had such nice daily bullish divergences playing out down here and regional bullish divergences playing out between the 59K lows and the 57K lows. And we really want to see that big push up. And this first push up was a nice push up here. Impulse, right? We had our sideways correction. And then we need this impulse really to continue. We need steam here to continue. With that being said, you could move down to 62.5 and still have the steam continue. And if you guys watch yesterday's video, I talked about even in a larger ABC correction where we're seeing our 57.7 to 64.4, that's your A wave. We had our running flat and a B, and your C wave in here. Your C wave bringing you up above 67.3. Well, in that C wave, you're looking for a 5-wave impulse within itself. So could we say that this 1112 that we just finished from Monday to Wednesday was a wave 1, and we're in a wave 2 pullback right now? That wave 2 pullback could bring us to 62.5. Now, hitting the 786 in a wave 2 is pretty common, believe it or not. Then our wave 3 would bring us somewhere, you know, above our 67.3K highs, I would say. Maybe we get a small SFP pullback, and then we get that last push up into 68, or even, I mean, if we take our trend-based Fibonacci extinction and we look at that one-to-one target, and this might not be absolutely perfect, but you can see 68.3 to about $70,000 would be your one-to-one target of that C wave. We do have some pretty interesting resistance up there. Of course, if we're looking at our larger descending channel, now this descending channel here, let me go ahead and just clean up what I just made on the chart for you. But you can see this larger descending channel is pretty much a smaller fractalized version. Right now, we're focused on this descending channel, right? We have a descending channel in here. You get the big dump to the downside followed by selling exhaustion. But if we can break out of this channel, then I would suspect that we're going to come to the midline of our bigger descending channel. And this is that, remember I was telling you guys about two forms of accumulation that I'm watching on Bitcoin? So the larger form of accumulation that could end the bear market is the 60K lows being our tap one. All of this, even if we get a pullback here and something like this, where this would be a smaller accumulation on the daily time frame, where we could bust up to $68,000 or $70,000 or even 77. And then we would look for another pullback to create that third tap on like a larger time frame accumulation. So this would be a tap one, tap two, tap three. And depending on how long this accumulation takes, if we actually break out here, if we actually, whether it's a model 2, which is where you make a higher low and then you break out and you see a move up, or if it's a model 1 where we're going to follow this smaller channel and make another new low and then break up. Either way, we're going to be looking and look at where the top of this channel is coming in. And it's coming in a little bit above $77,000. But if we pull our Fibonacci golden pocket, and I don't think, hold on, let me just zoom out onto the daily to make this a bit easier. So first off, this dump is more than a 30% dump. So you do want to use your, if you're on the logarithmic chart, you want to use your log settings there. You can see it's a 30% dump. It's right on that edge, but let's throw on both our golden pocket and our 786 on the chart. Then we'll take it and we'll put it on log scale to adjust for that high volatility. You can see that it is coming in. Your channel could be, highs could be coming in a little bit above that. If you use the non-log scale, it does align a little bit better. But we're pretty much looking, if we can flip this midline, which by the way is your anchored VWAP from the bear market lows on Bybit, is where that midline is coming in. First order of business is we need to break out of this range. We need to see some sort of accumulation form in here, even if it's a pullback, to make a higher low, and then we break this thing up. Golden pocket 786, get a pullback. That could give us our larger accumulation that, if you can see here, if you look at the bottom of my screen, Tuesday, October 20th, if just as far as like the symmetry of this inverse head and shoulders here, or accumulation in October, according to the 4-year cycle, is around the end of the bear market. So that is something that I'm going to be following closely. And anyone that's been on this live stream for a while knows that we've talked about this many, many times. I'm sure some of you are sick of hearing it, but it's a valid scenario in my opinion. Now we'll have to adjust if the data changes, right? If we see a massive dumpage to the downside, obviously that's going out the window. Or if we see a massive pumpage to the upside, that's going out the window. But for now, it is a valid scenario that as traders, we do need to be paying attention to. Okay, Michael Mitzal, good evening to you. Of course, absolutely, for the chat updates. Thank you for being in the chat there. My liquidity is 100K though. Your liquidation is 100K. Okay. Your liquidation on that short. Well, man, if you're short from 65.4 and you're looking at a swing short position, you know, and first of all, I'm not a financial advisor. I don't give financial advice. This is not financial advice, but the proper kind of technical stop loss would be above that next high, you know, at 67.3. And if you're looking to really bring this thing down, even if you're looking to bring it down to $56,000, that is still a decent swing position there. Now, you could tighten that up a whole lot if you wanted to, because you have a rejection from yesterday's highs. You could put that stop above yesterday's highs and then look at even coming down to 56,000. That is a much, much better risk to reward ratio. So I don't know what you calculated for that stop loss, because your position size is going to be based off of that. But yeah, you're in a good position right now, Adam. You're in a really good position on that short. And to me, like I'm in a short, let me just tell you guys this. I'm in a short from $65,200, right? As soon as we lost our purple box right here, as soon as we started to lose our purple box after taking that double top, I did the short, but I calculated my position size based off of the stop being above yesterday's high. And my first TP is just going to be down here, you know, in this zone, which is already a 7-to-1 risk to reward ratio. But let's say I'm looking for that big swing short, right, to make new lows down to $56,000. And remember, $56,000 is where we have a macro value area low. So coming down there, I mean, look at the risk to reward on that trade if that plays out, right? The position size. Now, you calculate your position size based off of this number, based off your stop loss percentage. So I got in relatively at the top here. And so I was able to put a pretty big position on this short trade. And I will leave some of it open, just like, by the way, I got into the long trade right here at $58,200 because this was our back test of the golden pocket after an SFP of 57.9. My stop is below 57.9, and I took a few profits. I took profit at 63.4. Remember, that was where the POC was. And then I took some profit at that SFP. I let you guys know that I had that limit order already there. So good hedge positions, right? That's what Jason termed the schlong. You get in short and long at the same time, hedging against yourself. No matter what happens, yes, one of your trades might get stopped out after a TP1 or a TP2, but you're in a good position to continue making money. Okay, Eric, breaking. Trump media to sell faster access to President Trump's Truth Social posts, which will let traders and investors pay for real-time feed of Truth Social posts. Wow, that is interesting. I wonder if he's able to do that. You know, I guess technically you're just selling access to the posts. So that's going to be interesting to see how that affects and how many people will actually pay for that. You think the Clarity Act will pass now? Well, I do hear that Trump just made some post on X about trying to get that Clarity Act boosted to get passed, or like to get clarity more. I don't know what the word I'm looking for on that is. I just read it earlier today on X, but who knows, man? That stuff is so political. That stuff is so, you know, every time it comes to crypto within Congress, it always gets pushed back. So I'm really not like crossing my fingers on this. I'm really not paying too much attention to it. Yes, we can, like, as it's happening real time, depending on what happens there, it will cause a catalyst in the market, right? A bearish catalyst or a bullish catalyst. But technicals are what I like to look for, and I just use those fundamental or news-based events that are happening as catalysts to kind of give my bias more strength or less strength. But I'm still trading the charts. What is the indicator at the bottom left window? What is the indicator at the bottom left of your chart window? This here, I think, R-Pink, you're talking about this. Well, this is part of NAMI V2. So it's pretty much the MOM, that's your momentum. So it's just taking this momentum wave and it's putting it in a like a bar graph for you. That's your money flow index, that's your stochastic RSI, and your VWAP. And if we look at, like, let's go to the daily time frame, you can see it'll shift on the daily time frame. Your momentum is still in the green, so that's why it's on this side, or in the blue. That's why it's in the blue over here. You can see your money flow is in the blue, money flow in the blue. You know, so that is just part of NAMI. Yep, part of NAMI, yeah. No, welcome in, man. Thank you so much for being here. It's good to see you again. Okay. Why do you use TradingView to find naked weekly POC and not platforms like Atas? I have Atas as well, but TradingView works perfectly fine for me. I mean, like those naked weekly points of control on TradingView, there used to not be a really reliable indicator to find those naked weeklies, but they work just fine on TradingView. And if I can simplify my process, then I'll simplify my process, right? Yes, Dylan, absolutely, man. Thank you for the kind comment. I'm glad it's helpful to you. Crypto Clan World, it's good to see you in here, man. It's been a while. Hope you're doing well with everything. Wayne Nerosi, liquidity lines up well at 62,500 and the daily. Yeah, liquidity. Well, that liquidity, so let's look at our liquidation heat map and let's go to our model 2. And remember, we're looking at like the last 2 weeks of price action, right? Because that has been this range in here. You know, this sideways range coming back really to Sunday, July 5th. So it's the 16th now, so what, 11 days or so? But this sideways range is kind of, because this push up was pretty aggressive, right? And straight up. So that's not part of range, that's part of an impulse. And then we start ranging sideways after that. So if we're looking at the last 11 days of this range, then we can go to our liquidation heat map and we can look at the last 2 weeks of price action and we can see where is that important liquidity within that zone, right? And if we need to lower it just a little bit to find more, but really, unfortunately, the liquidity is coming down to take out the whole trail, right? Because we have liquidity from Monday, July 6th, Wednesday, July 8th, and then Monday, July 13th. And this is all liquidity trail that's building. And if we start to flush that far down, it is probably going to sweep all of that, you know, sweep it all together. And then you might get a move from there. But if we start to break this structure bearishly, guys, because from 57.7, we are still maintaining bullish market structure overall. Like, let's zoom out to the 4-hour time frame. And if we look at the 4-hour time frame, we have our low, we have our high, we have a higher low. Well, okay, so yeah, we have our low, we have a higher high, we have a higher low, we have a higher high. So could we put in a higher low and then still create higher highs? It is starting to get weaker, right? This was very aggressive, and now we're starting to get weaker in that channel. That is that buying exhaustion that I often talk about. But we are still maintaining bullish market structure. So remember, market structure is king. If market structure is king, then we should be looking at least looking for long positions if we have proper confirmation at some higher lows so that we could bring it up to a higher high. Until that market structure breaks, until we get that clean market structure break, then that's when we can start looking for the bigger dump to the downside or some bigger support levels down below us. So yeah, this box has changed a little bit, guys. We have, if we take our Fibonacci golden pocket, it's been raised a little bit, that new Fibonacci golden pocket. Let me make sure that is not on log scale. Yep. And then we also have, I believe it was our value area low that was down there. Yeah, your value area low down there. So this box, we can actually move it up a little bit right in here. That would be your next big zone. And remember, we have the weekly down there as well, a naked weekly point of control at $60,100. And then we also had, what was it, a daily level, I think was down there. No dailies down there. Okay. But that, so once again, remember last week when we were dumping here last week, we said the big support zone was between 60,400 and 60,100. Well, with the new highs that we made this week, it moves our golden pocket up just a little bit, and our value area high has moved up just a little bit as well. It's moved up about $200 each. But that's still going to be your big zone. If we lose 62.5, of course, you're looking at liquidity. But if we flush all three of these together, I would think that we're going to flush them into that golden pocket and value area low. And then we would be looking for a 3-wave corrective move before continuing down. Okay, Benny Blanco from the Bronx, welcome in. Good afternoon to you as well. I was thinking the current range looks like a running flat correction, but I'm not the Elliott wave guy. Is that still a valid pattern or scenario for now? So are you, okay, I'm thinking the current range. Crypto Clan World, you would have to let me know more time frame wise, but what we're looking at is clearly this is impulsive price action here. And then yes, this is a running flat in here, and it's a running flat because your Monday lows did not take out 61,450. And because of that, that is still a running flat. And then we had an impulse here, right? So this is your impulse. This is your correction in a running flat, and this is your impulse. The big thing is this impulse that started Monday, it's not necessarily done with, right? We had if we zoom in on lower time frames, all of this was a 1112 impulse. And we very clearly showed that, right? I can zoom in on the 1 hour and show you guys right now that we were looking at that all week long as a multiple 1-2 impulse, right? 1, 2, 1, 2, 1, 2. You get your big explosion in a third wave. Oops, the third wave goes to here. And then you get your 4, 5, 4, 5, 4, 5 in here. We got the 3 1 2s. We got the 3 4 5s. So that is done with. This all is done with on yesterday's high. Now, this push up, just like I said earlier in the stream, could just be a wave 1 of a bigger 5-wave move to the upside, right? You would want it to be kind of equal in length to your A wave, right? So you would want it to be somewhat equal in length here, and that's where you take that trend-based Fibonacci extinction, but about a $6,000 move up. So from that low, you'd want a $6,000 move up. Or you could just do something like this, where you take that trend line, you throw it here, you grab it, you throw it on that low, and you would be looking for something like that. And within this move up, you're looking for a 5-wave impulse, right? A 1, 2, 3, 4, 5, something like that. Maybe the 2 is going to come all the way down to 62.5. And in the bullish scenario, guys, that we're not looking at an ABC here. This is not an A wave running flat and a B wave, and then your C wave taking out the highs of the range at 67.3. You roll over. In the bullish scenario, you're looking at this as a wave 1. You're looking at the running flat as a wave 2, and then you want to see that third wave explode out of this range. You do not want to SFP this. You want to explode out of that range, probably coming to around $72,000 to $74,000 where your golden pocket is. And then you would probably see a small pullback, right? Your pullback in a wave 4 can bring you all the way down to the 0.5, or maybe it's going to back test those range highs or the value area high of this range. And then you would get that fifth wave maybe coming up to $77,000, $77,000, $78,000. And that would be really nice because it would be a very clear bullish market structure break, right? And we do have the weekly bull divs on the chart, the daily bull divs on the chart. What I'm thinking, and well, I guess it doesn't matter what I'm thinking, right? But if we do see this kind of 3-wave corrective move to take out 67.3, I would really be watching for a higher low to make that accumulation, right? Tap 1, tap 2, tap 3, or even a model 1 accumulation where we still make another new low. But I am looking now with the weekly bull divs confirmed on the chart, guys. I am looking for swing longs. I am looking for bigger breakouts to occur. That doesn't mean you can't see local pullbacks, and local pullback could be all the way to 60K. What do you think about Web3 games and their future? How do you think of the grid and its gun token will develop? Well, I have not, Father Payne, welcome in, by the way. I have not seen and dealt a lot with Web3 games. What I would say is I would be very, very careful, and I don't give financial advice. This is not financial advice, but I would be very careful with tokens based off a single game, because we've seen that with games in the past, right? Where the game gets super hyped up, and then as the game gets old, the token dies off, right? As the attention goes away from that game, the token dies off. So if you're playing the momentum of a game that's doing really well, first of all, it'd have to be a good game where people are actually using the product. Then yeah, you can trade that token. You can trade that momentum that is created. But as far as game tokens, once the game kind of dies out, the token will die out. And you want to look at the larger use cases in crypto, like Bitcoin, obviously store of value, hedge against inflation, layer ones like Ethereum, Solana, apps can be built on top of them. They're always going to have use cases, right? And that's kind of the coins that I'm looking at, or like Hyperliquid, you know, these decentralized derivative exchanges that you can trade on. They're always going to be in use. So in my opinion, it's better to look at those coins that have real use cases like that rather than the coins like that. But we can look at Gun. I'll take a look at it we'll take a look at the technical analysis on it in just a minute here. How long did it take you to learn Elliott waves, and how long have you been trading? So Wayne Rossi, I've been in crypto since I think 2019 or 2018, late 2018, late 2019. I did a lot of DeFi and stuff like that, and spot trading the first couple of years. And I think mid 2020 is when I started like really getting into derivatives trading or just technical analysis trading. But Elliott waves, I would say I still don't know them fully. You know, I'm decent at them. I would say I'm in the intermediate range, but I'm no Kuhn's trader, you know, that is an expert at them. And I've been studying Elliott waves for about a year and a half now. And I think Kuhn's, who works with Elliott Wave International, he's really one of the best out there, in my opinion. He said it took him about two and a half years to like really get down the rules and all the different scenarios and the probabilities. So yeah, it's a long process. But also, I'm a little bit different of a trader than Kuhn's. He uses primarily Elliott waves to trade, and he trades based off Elliott waves alone, or like the bias that Elliott waves give you. I use Elliott waves more in macro confluence. I think Elliott waves are very, very helpful to get a bias, right? Like if you see a 3-wave corrective move up here, you're knowing, and then you start to break market structure bearish, so you know you're going to take out that low eventually. So now you're just waiting to take out that low. Now, once you take out that low, if you have bull divs, that's why we were also looking to push up here, right? We were so many different scenarios. We were looking to come down to take out this low as well, because we wanted to see a 5-wave move down, 1, 2, 3, 4, 5, right? We wanted to see one more impulse down to take out your lows at $59,000. So I think Elliott waves are very, very useful for bias, and you can use them in combination with other strategies to kind of get that what you want to, you know, where you want to look for longs, where you want to look for shorts. Elliott waves in confluence with pitchforks are really well, and in Elliott waves in confluence with like Fibonacci retracements, obviously, and trend-based Fibonacci extinctions. Okay, your knowledge and insight are amazing. I am really new and would appreciate advice on where to start to learn Elliott waves. Yeah, Wayne Orosi, well, thank you so much for the comment there. And I would say, so Wayne Orosi, I'll tell you this, I've never taken a course in my life. I've never paid for a course in my life. I have grinded like many of you on here, come in here every single day and watch the live stream and pick up little bits here and there. Maybe you watch some different crypto tubers as well, and you pick up bits from them. And that's what I did. You know, I started, Bitcoin Hyper was one of my main teachers, and I became close with him and just watched his streams, learned his style. Then I went to Jason, and then of course, Andy from Bitcoin Consensus and Dewald, they're really good traders. Of course, Kuhn's trading, and even Frankie Candles with volume profile trading. And I just picked up the pieces that mattered to me. And I found a strategy, a kind of a Frankenstein strategy, piecing together all those different pieces. And also, experience is the greatest teacher, right? Just time in the market. Learning the trading psychology and learning risk management is probably the best thing you can do. But for Elliott waves in general, I would say Kuhn's trading, and he has actually got an Elliott wave compendium that's going to be coming out very soon. It's going to be the most detailed book out there on Elliott waves, and he's working with Elliott Wave International with that. So I would say that, but also you can just watch the live streams every single day, watch the videos every single day, really study what he's talking about when he says, hey, an ABC, you know, impulse, ABC is an impulse correction impulse. You know, you're looking for a 5-wave move in here for an A wave, a 3-wave corrective move in a B wave, and then another 5-wave move in a C wave, right? Pick up those small things, and over time of repeatedly hearing them day after day after day, you're going to start to really pick up on that information and start to kind of memorize it for yourself. And then that's, once you start to memorize it, now you can start to utilize it within your trading and actually, yeah, I guess get it down so well that you can use it in confluence with other things. But I'd say keep going, man, keep going. The biggest thing is risk management, right? You can have the best technical analysis in the world. You can nail the bottom here. You can nail the top here. If your psychology is so greedy that you bought at $58,000 and we came up to 65 and you have not taken any profit at all, and then what if we dump and come take out that low? Now you just round trip this thing because you were too greedy. So knowing the having the psychology to take profit when you should and to, you know, move stop losses when you should, that's a big part of it. And then risk management is also a big part of it, right? Because what if you were going to take a long down here, you longed 50% of your account because, hey, it's a major support level. You know, maybe you longed it here and then you're, oh, it's going up. And then it makes one more low. Maybe it liquidates you or stops you out, and then it pumps and you lost a major position, part of your portfolio because your position size wasn't correct. So that is a big, big part of it. Yeah, you can't ignore the weekly bull divs. Green RS on Yeah, on Market Cipher B, even if it fails, it is likely to make another one. I agree. So that weekly time frame. So the one thing about the weekly, with NAMI, we're not seeing the weekly bull divs with NAMI, and I don't like that. We're not seeing the weekly bull divs with NAMI because you can see the last time NAMI gave us some weekly bull divs was from this low to this low. So from our $80,000 low to our $60,000 low, it gave us bull divs, and those bull divs gave us a move from 60 to 83,000, right? A $23,000 move almost. Well, NAMI or Market Cipher was not showing bull divs there. Now it is showing the bull divs, but NAMI locally is not. It's not locally. So if we do come down for another low at like $56,000, because remember, $56,000 is a major value area low, right? Your value area low at $56,000. If we do see one more kind of grind down and we create bull divs between all of these lows and even these lows on NAMI, like it's something like this, and then Market Cipher would probably just extend this bull div here, like something like that, right? That's why I'm looking for major pushes to the upside, because historically, anytime Market Cipher has given us a bull div on the weekly, right? Look at this pump you got here. So even if it's a pump where we pump up maybe $20,000, $30,000, then we drop to make new lows, you should still be looking at, like, this is a good swing trade, right? From here all the way to here is a massive swing trade. If you can't make money off of that, like a 30% pump on Bitcoin, you're doing something wrong, All right, so let's see here. Thank you, R Pink, for posting that. I will, guys, let me take just a second to shout out the partners of the channel. So the main partner of the channel is BYDFI. They're a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on your trading fees, and you can earn up to 40% discounts on those trading fees if you do deposit some larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses based on the USDT market. So it doesn't have to just be trading Bitcoin. It can be the altcoins as well. Depending on the amount of volume you trade, you can earn up to $8,100 extra dollars. They're offering some of the best initial deposit bonuses in the entire industry as well. Deposit $100, you get a 50% deposit bonus, which is double what most exchanges will give you on a $100 deposit. They're giving 20% deposit bonuses up to a $1,000 deposit and 10% deposit bonuses up to a $20,000 deposit, which is a great incentive, right? That really can boost your portfolio. So if you're interested, you do have to KYC level 1 to get the bonuses, but they are there. I've also partnered with BYDFI to create the Telegram community. It's a private community, but it's free. All you have to do to get into the community is join BYDFI using my affiliate link. And after joining, you have to make a minimum deposit of $100 or more. You can deposit more if you want to get some of the bigger bonuses. That money is your money, by the way. You're not paying it to me. You're not paying it to BYDFI. You're just depositing on the exchange in hopes that you will try out the exchange, like it, and stick with the exchange. But after making the minimum deposit, you click the Telegram link in the description of this video, or rpink posted in the chat, and you're going to type in /verify and then your BYDFI user ID, and that'll get you into the Telegram. And your user ID is probably going to be a string of letters and numbers for you guys, but /verify user ID, it'll get you into the Telegram. I have a few other exchange partners, Blowfin, MEXC, and Bybit. Links are in the description for those exchanges. If you guys want to use those, they are offering some benefits if you do sign up with my links. And then lastly, we have NAMI trading, which is this momentum and money flow indicator at the bottom of your screen. And I use it for confirmations, guys. As we were coming up to this purple box of resistance, look at the confirmations we saw on NAMI, like 8-hour time frame. Triple drive of bear div, right? You have high, 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 bear div, money flow bear divs. And so as we were coming up into this box, if I didn't see confirmation to short, I wouldn't have taken a short. But because I saw confirmation, I knew that at least a scalp short from this area was likely to play out. And since I've been using NAMI and being a confirmation-based trader, it really has helped my profits a lot, because it gets me into the trades that are more likely to play out, and it keeps me out of the trades that are less likely to play out. So if you're interested, I've partnered with NAMI to get you guys 50% off. If you click the affiliate link, and then when you're checking out on their website, use discount code DIVINE50, you guys can get 50% off NAMI. And in my opinion, guys, any great like any expert in their field, let's say it's an electrician, a plumber, they use the proper tools to help them get the job done more efficiently and better, right? So for me, both Market Cipher B and NAMI are those tools for me to kind of do a better job in my field of work. All right, thank you guys. Let's get back to the TA here. So where was it? Is it still a valid wave 1 and then a possible wave 2 that goes to $60,500? Well, if we go down that far, no, because you're looking at, so in an impulse, right? If this is a wave 1 here, and then your wave 2, and then if you want your wave 3 to continue, you do not want to break the lows of wave 2, or even if you come to the golden pocket of your wave 1, pretty much if you break these lows, it's going to invalidate it. So no, you wouldn't want to see that. If you come down to 60,500, then we would have to completely rework this, and this would most likely be a 3-wave corrective structure that's done. You're breaking market structure bearishly. You would probably be looking, you could still take a long from there, but you would be looking for a corrective move up towards golden pocket, and then you would probably continue down. And that would also kind of create that left shoulder head, right shoulder, topping reversal pattern, and you would probably come take out 57.7. So we don't want to break the low of 61,750. I don't think the bottom is usually, usually November, January. Yes, Ryan, I agree with you as far as time-wise goes. We should be looking at October, November, December, that fourth quarter of 2026, maybe the first quarter of 2027. But time-wise doesn't mean that the low can't be in price-wise, right? Or maybe if it's a Model 1, accumulation, we have our tap 1 here, our tap 2 here, and then maybe you're going to get another tap 3 that comes down to 56 or 54. That could be your Model 1 of this small guy, right? This is your daily accumulation pattern. And then we even have a weekly accumulation pattern that could be forming from 60K, where this could be a tap 1. All of this would be a tap 2, right? It would be your internal accumulation within a larger accumulation. And then say you break this out, you reject, you come all the way back down again, right? You could still look at a tap 3 within the larger channel. And let me get to the Bybit chart here, and I will show you guys that larger channel. So if we get to the Bybit chart, we're looking at this channel, right, of all this. So there is a scenario where you do see a Model 1 in here, right? You get another new low, you pump up, and then you come down all the way again, maybe to 54. By the time that happens, October, November, December, you could be at 56,000, 54,000 for another new low. But I would say a lot of people think we're going to dump into the 30s, and yes, it is possible. I'm never going to say it's not possible, but really with what we're seeing as far as time-wise, price-wise, technical-wise, I just don't see it happening. I don't see a giant dump like that. Now, if I'm wrong, I will still see, this is the great part about being a trader. You can have that bias, but you can still make money if you're wrong, right? Because even though my bias is that we're close to a low, I will be shorting resistances. And if that short continues to pump or continues to bleed down, I'll write it down. And if this is the low and the long is in, I'm in from the low and I'll continue to write it up. So that's why as a trader, I think trading is so getting in a mindset where it doesn't matter if you're right or wrong because you're positioned against your own bias anyways is super important to understand and learn. You should be hedging against your own biases. You should be shorting at resistances no matter what. You should be longing at supports no matter what if you have proper confirmation. And then no matter what happens, you're still going to be a winner overall. Even though your theory was wrong, you're going to be a winner as far as your trading and portfolio and all that stuff goes. So that is getting into the mindset of a trader is so crucial, guys. Clapjack, welcome in, man, and good afternoon to you as well. Let's see here. If you had to choose, would you choose NAMI or Market Cipher? I am looking into it, but I find it hard to understand. So I think NAMI, the cost of NAMI for lifetime subscription with the 50% off is around $740. Now, Market Cipher is $1,500, and they do have sales. I don't know when those sales are because I'm not affiliated with CryptoFace and Market Cipher, but I think they both have their values. Market Cipher's overall money flow is probably the best money flow I've seen on the market, but it's much slower than NAMI. And NAMI, especially if you're like an intraday scalper or day trader, I do think NAMI is quicker to confirm and it's a little bit easier to use as far as confirmations. They both have value, and I couldn't tell you which one is better. I like both of them probably equally. And honestly, the true magic is when you combine the two, because that ultimate trade setup I told you guys I look for, when you're seeing bear divs on Market Cipher with money flow topping out and curving down, and you're seeing multiple drives of bear div and money flow bear div on NAMI, that's like that ultimate setup for a reversal, right? So and just like we were seeing it, let me just show you an example of that. This is why I was so dead set on taking along around $57,900. Well, first off, $57,900 was a naked monthly point of control and multiple high time frame pitchforks. But you can see on Market Cipher, it's slower, right? Between 59,000 and 57,000, we had the bull divs confirm. Money flow was starting to curve to the upside. It was bottoming out and starting to curve to the upside. Well, NAMI being much quicker, you can see that NAMI had not only regional bull divs, but it had the local bull divs in here as well, and it had the money flow bull divs in here. So when I saw that this is my prime perfect setup where I'm looking for at least a decent reversal in price, whether that's in this case up, but sometimes down. I mean, when you combine the two together, when I see these two together, this exact kind of confirmation setup, it literally, I have not done the hard statistics on it, but I'm telling you guys, it plays out at least 75% of the time, at least. Probably more than that. So, and you know what? Like, there's plenty of other indicators out there that can be useful to you as well. I would say a lot of traders trade without any indicators at all. They trade solely based off price action, solely based off hitting levels of support and resistance. But for me, I like to see the confirmations because it gives you more peace of mind to enter the trade. And also, it does let you know when those fake outs are, because there are a lot of fake outs in the market. Okay. Yeah, guys, please do smash the like button. If you are getting any sort of insight into the market from this live stream, please smash the like button for me. Please subscribe to the channel. Let's get in here. Let's actually start looking at some of this TA, guys. And I do want to look at, I know that hype was dumping pretty aggressively today. It's going to be coming down to a liquidity grab that I'm interested in taking a trade from. I also know that Arrow was pushing down pretty aggressively, and I was looking for some trades on Arrow. Actually, it was pushing up aggressively until earlier today. Do you use order flow before you enter, or does it complicate trading much for you? Okay, so no. The only time I use order flow is if I see bearish CVD divergences or bullish CVD divergences, right? So when I'm looking at, like, as we were coming up here in this area, if we were seeing bearish CVD divergences, I would look to enter the short, right? Or if, like, a bearish CVD divergence is when you are making lower highs on the price action and higher highs on the on the CVD. That means market longs are stepping in, but the price is not able to break structure bullishly. So that's a bearish CVD divergence, and you want to see it on an increase in open interest. If you can see that, you should have the bias not to long and that you're going to continue down. So I use order flow for divergences. Also, I use order flow to look at the strength of the move. If it's a real strong move, you will see your open interest increasing with that move. And just like the other day when I was talking to you guys, I think it was on Monday. Let me zoom out to the 15-minute here. On Monday, the impulse that we saw on Monday, this guy in here, remember that impulse was long stepping in, but they were not new long positions stepping in. And we know they were not new longs because your open interest was decreasing. So we saw positions closing out. So we saw a bunch of late shorters, and I described to you guys that too. We saw shorts coming in here. We saw shorts coming in here. They were new shorts that were coming in. So the pump that we saw on Monday was a short squeeze, meaning that it's not as healthy of a move to the upside as if new money was coming in successfully pushing the price up. Man, look at our CVD dumping here, though. Look at this giant dump in CVD. A lot of positions closing out. And you can see that it's really a lot of those. Well, it's a mixture of longs and shorts that were closing out, but that is a lot of shorts coming in. Or positions closing, long positions closing, causing a long position close as a short, right? A market sell as a short. Sudeep, welcome in. Much love to you. And thank you for being here and thank you for modding. 200 SMA is at 73K. Okay, well, that 200, I'm sure you mean the daily SMA, 73K. That is kind of that golden pocket zone. Yeah, we'll look at Hyper. I'll look at that gun one. Baby Genius, I am doing well. Thank you for being here and thank you for the comment, man. All right. The Quant, don't trust Nami, will leave you behind in the dust at the bottom. Man, I've been using it for a while. It's worked for me. Now, no indicator is 100% accurate, guys. Like what I learned and what I teach is price action first, indicator second. And what I mean by that is first you mark out the levels, right? The technical levels, liquidity levels, volume levels, daily levels, weekly levels, anchored VWAP levels. So you mark them out, you find where there's confluence, and that's where you put your boxes of interest, right? Support or resistance. Now, those are the areas you're looking to short or looking to long. I use it as a secondary step, right? I'm not going to short right in here just because I see bear divs, right? I'm not going to short because I see bear divs there. I'm waiting for my box of resistance to be hit, and then I want to see the confirmations. And if I see confirmations, I'll short. So price action always comes first. Mark out those levels, mark out those zones of confluence, and then once you get to those zones, that's when you come down to your indicators and you see if you have confirmation. Not going below 60K in history ever again. Man, that, I'm long from 58 too, so that would be kind of nice, but I would just be very careful with that mindset. I remember, and Jason always talks about this, when we were up at the beginning of the year in 2025, we bounced from 74K and we made new all-time highs, and everyone was saying there's no way we ever drop below 74K again. There's no way ever we're going to drop below 74K again. And what happened? We dropped below 74K, right? We were looking at that flat coming in here, and bearish divergences on the weekly, on the monthly time frame up here. I mean, it was just, there was so much. You should go by the technicals, and I would just on those super hard biases like that, I would just be careful with that. But I understand what you are saying there. I think that we could be near a low. Never say never, right, Adam? Never say never. And Adam, thank you for the comment. I love sharing my knowledge with you guys. Honestly, there's so many awesome people in this community, and I think we're building, what my goal is to build a community of traders that all kind of have their different styles, their different strategies, but we all kind of work together to scrape money away from the market makers, right? Because we're retail. No matter if you're trading $1,000 or $100,000 or $1 million, you're still retail. And if we can get a bunch of traders in a community that really all have their different views and different strategies, but support each other, kind of work together to figure out the market, I really do think it's much more beneficial than being in competition with other people. And first and foremost, you should always follow your own TA first, right? But you can use other people's strategies or technical analysis as kind of a support to your own. And that's what I'm really trying to create here. And I think we're doing a really awesome job of that. We really have some amazing people in the community. XRP has weekly bullish divergence. Yeah, we'll look at some of the altcoins right now, guys. If you use your link for NAMI. So Wayne Rossi, I'm sorry, but no for that. The Telegram is specifically partnered with BYDFI. So BYDFI reached out to me and they wanted me to start this Telegram group, and they manage it. They run it for me on a day-to-day basis. They manage it. So unfortunately, it's only with BYDFI that if you can get into the Telegram, only if you join BYDFI. Okay. We could see 40K. Yeah, I agree. So let's go to the Binance chart. If we do lose the high to mid 50s, guys, so first off, you can see this is our multi-cycle pitchfork that literally our entire bull market has been very, very highly respected. 2024 all-time high, 2024 low. You get your distribution up here above the midline. You try to make the midline again. You get another distribution at the midline. We dumped all the way to the bottom of this thing. This is the first time in the bull market we've hit the bottom of our multi-cycle pitchfork. Well, at the same time, if we go to the Coinbase chart, we have multiple high time frame pitchforks that are at the bottom. And let me just clean up this chart a little bit. You can see we rejected at the 2025 all-time highs at the top of the pitchfork. We're now working our way down to the midline. If we look at our bearish pitchfork, which has been guiding us throughout this entire bear market so far, pretty gosh dang good, right? Why did I short $82,500? 82.3. I was letting you guys know for weeks that this was a swing short to take out 60K. You can go back and look. It was not hindsight analysis. I was letting you guys know that this purple box was a massive short, a swing short. It was based off the pitchfork midline. Look at this. We've just come down and hit the bottom of the pitchfork. And I know that alert is in the way there. Hold on. Let me just hide some of this. No, I don't want to delete it. Multiple high time frame pitchforks at support. Also, your anchored VWAP. Anchored VWAPs are volume-based trend supports. Well, what's your strongest volume-based trend to continue a bull market? It's your anchored VWAP from the bear market lows. So we're finally coming down and actually hitting that anchored VWAP from the bear market lows. We're hitting the bottom of our bearish pitchfork. We're hitting the midline of our bullish multi-cycle pitchfork, and our second multi-cycle pitchfork, we're hitting the bottom. So there's so much support down here with weekly bull divs, with daily bull divs. That is why I'm looking for a bigger move up. But if we break this down, if we start to break all these macro pitchforks down, specifically this multi-cycle one, there is not a lot from keeping us coming down to 41 to about $39,000. You know, we have liquidity. Of course, liquidity is going to be important. You have liquidity here. You have liquidity here. You have liquidity at 49. But you could see small bounces on those liquidities, but you could make a quick flush down to the mid to low 40s. And that, by the way, is where your anchored VWAP on Binance is. And Binance is the largest exchange as far as volume goes. It's also your one-to-one correction target in a bigger ABC, right? Where you see A, B, and C. Or in this case, I would classify it as a WXY, right? You have a three-wave move in a W. You have that three-wave move in an X. And then we would be looking for some sort of three-wave move in a Y to come down and hit that one-to-one target. Your minimum target would be 52K. If we start to break these down, guys, you could see a massive push down. Inflation. Yeah, inflation's once 15K BTC, today's money is now 59K BTC. Yeah, inflation has destroyed everything. I know that. That's for sure. Okay, can we peek ZEC? Yeah, okay, let's get into some of the altcoins. So first off, I want to take a look at Hype real quick. And we'll look at, we'll go through these pretty quickly here, but Hype is coming down. So first off, we rejected from that 786 Fibonacci. Let me go to the 4-hour time frame. And we're trading this upper range in here, this upper range right in here. We broke this channel down. We came right into that box. By the way, guys, that box was there for a reason. Liquidity, internal liquidity into a 786. There was also a naked, I think a weekly and a naked weekly point of control up there. We rejected from that box. We lost the channel. Today, yesterday, we back tested that channel, and now we're dumping to make new lows. We're coming down to grab some liquidity of the second pivot of the channel. And I tell you guys this all the time on my YouTube channel. When we break channels to the downside, you will often see a back test, and then you grab the liquidity of the second pivot, or you sweep the liquidity of the entire channel. Now, because we did have, remember, I was also talking about we could move down to 52. We could be seeing an A, B, C, or a bigger move down, right? Because you made a lower high here. So I am looking for scalp long positions off of the liquidity grab at 61.6, 61.7, let's say. And depending on how we grab that liquidity, we can look at our smaller range that would be just this from the highs at 76.9 over. If we grab liquidity at 61.8, 61.7, you might just see a small move to backtest the value area low and then continue down. But even along from a liquidity grab to the value area low could still be a nice scalp trade, you know, depending on the risk to reward that you get there, how quick you get in. You would be looking at the long as soon as you reclaim that. First TP for me would be that value area low, but depending on where that stop loss is, that's still a 6-to-1 risk to reward ratio. right? That's still a good trade, even if it's a small move up there. Now, let's say you grab that liquidity and then you make a even bigger, you break back inside the volume profile. Well, because of this huge drop to the downside, you're probably going to move up pretty quick to that POC. So I have the alert set, you guys can see, and I will let you guys know if I enter that. If we don't SFP it, then I am waiting to come down to the bottom, pretty much to the value area low, and sweep all the liquidity of the channel. You can see our lows of the channel are pretty much right at that value area low. So I would be looking pretty much to sweep 58.4. And then if we don't sweep 58.4, if it doesn't SFP that, then you're probably going to come all the way down to 52, where we did front run by since your golden pocket. You can see that low is at 58 or 52.58. Well, the golden pocket was at 52.46. And by the way, we barely took out the highs. You can see we barely took out the highs. So is this some sort of larger flat correction in here? And then you're going to continue up. It absolutely could be. And that's why I've had that, like, trust me, if we SFP 52, I'm going to be looking for swing longs on this thing. For now, we're dumping, and we're dumping pretty aggressively. I don't like, so we took out some internal liquidity in here, but the high we wanted to take out was this high, and we didn't quite take it out. It was at 69.31. That would have given us a nice bullish market structure shift and more probability to move higher before dumping lower. But now, because we're dumping and we're taking out the low from Monday, I think we are going to continue down, and we're also breaking the value area low. So if we close our daily candle below the value area low here, yeah, you might get a small move in an SFP, but you're probably going to continue down to rotate to value area low and sweep some liquidity that was built. ZEC, on ZEC, and by the way, we have a really good trade coming up on Arrow as well. So ZEC is interesting because we had this upper distribution range up here. Left shoulder, head, right shoulder, or tap 1, tap 2, tap 3. You get a 50% dump to the downside. Massive, massive dump to the downside. We were looking for shorts around here. Remember, right at that weekly, we were also looking at this as the end of a 5-wave impulse. 1, 2, 3, 4, 5. You got that 5-wave impulse. We were looking at this initially as some 1, 2, 1, 2, a dump here. But you would have to say that this is, I don't know, because this as a expanding diagonal there with just a giant liquidation dump, I don't like the way it looked. But from that low, let's just say that dump happened. From that low, I am looking at even seeing a 3-wave corrective move to come up towards value area high, and then we could roll over again. So I've been looking for, first off, if we look at the volume profile of after the dump, just the price action after the dump, because we're looking at that corrective move after the dump. We are now breaking out of the value area high, flipping it to support. So now we would work our way up to the larger value area high, which is going to be where your upper range value area high is as well, your distribution range value area high. And that's also the minimum target for a corrective move. For an A, B, C, you're looking, the minimum target is the 618. Well, actually, sorry, the absolute minimum target is taking out your A wave highs, but 61, your 618 there, and we barely front ran it earlier today. So let me zoom in onto the 1 hour. We had barely front ran it, and so far we're chopping in this little corrective channel. Yes, we are trying to lose it right now, but I think that we could see a move up to actually hit that 618 or to come a little bit higher to hit 603. And so I'm looking for shorts once, if we do get up there with some more bear divs, because we do have some pretty bad bear divs on the chart. 4 hour time frame, you can see the bear divs, you can see the bear divs. And then on the 8 hour time frame, bear divs, money flow topping out, curving to the downside, money flow bear divs forming. So I'm looking for shorts on ZEC, but I'm not looking for it until we come up into kind of this box up here. You have volume resistance. You have your Fibonacci, your trend-based Fibonacci extinction resistance there as well. By the way, we were looking for the longs down in this green box way ahead of time. We got that long that played out perfectly. Other than that, I wouldn't be looking for longs right now on ZEC with the bear divs that we're seeing. I'm not really looking for long positions. I'm really looking for shorts, but if you wanted to take a scalp long on this thing, you could just look at the market structure, right? From that low, you have your high, higher low, higher high, higher low, higher high, higher low, higher high. So are you going to put in a higher low around the golden pocket and then continue up? If you want to do that, you can pull a Fibonacci golden pocket from the low to the high of your most recent move. You're looking at that golden pocket, and that's going to be coming in around 527 to 524. Let's see if we actually have a naked daily point of control in there. Actually, we're hitting it. That's the low that we hit an hour ago or 2 hours ago. What I would say is this looks pretty corrective so far. This looks like a corrective descending channel in here. Now, yes, we are starting to break that channel to the downside, right? You can see I pulled it from the high to that lower high down to that first initial low. We lost the channel. We rejected the VWAP and the midline of the channel, so you should have expected a new local low. But now that we're hitting that naked daily point of control, if we can get back inside of the channel, then we might see a move to the top or a breakout and a continuation up. On Arrow, we are pumping up to some very, very key resistance. Wait, no, it was Ondo. I'm sorry, Ondo. Ondo's had a massive pump over the past few days here. Ondo's breaking out of our big descending channel. We've been in this descending channel for quite a while. We were able to break out of it, break above your POC yesterday, and I'm looking at a short around 39.5. because it is our golden pocket and we have some liquidity resting there. Clearly, this is impulsive, and we have a bunch of 1-2s in here. 1-2, 1-2, 1-2. This is your 3. Now you're forming 4-5s, 4-5s, 4. If we can get one more high with some bear divs, we are seeing some bear divs on the chart. If we can get one more high, grabbing that liquidity at 39.46 into your golden pocket, I will look for a short. Now, that short could be as simple as, and also your 1.618 is there as well, guys. So if we're looking at from the lows, this being a wave 1, wave 2, wave 3, you'd be looking for a pullback in a wave 4 before getting a wave 5 and coming up to the value area high of the range, grabbing some more liquidity. 786 is up there. So the short that I'm looking for at 39.5, it would be an SFP into the golden pocket. I would put my stop wherever that wick ends, and then I would be looking as a TP1 to target the POC, because you're going to be front running that POC. That's not meant. Right? So you short once you lose that level. Once you pierce above it into the golden pocket, maybe you're going to pierce above it all the way up to 40 cents, right? But still, that is still a good risk to reward ratio for a scalp short. And then if we start to bounce around the POC, you can add and bring it up to 43 cents. But it's looking like a pretty nice trade. And the thing with Ondo is you get these massive pumps and then you dump right afterward. I mean, like, it's pretty wild. Now, on the weekly time frame on Ondo, me and Mark Dutch were talking about it. I don't know if Mark Dutch is in the stream here, but on the weekly time frame, I am looking for a new low on the weekly time frame, because we're looking at a very clean impulse down. A wave 1, a wave 2, your wave 3, and then in this wave 4, WXY, it rejected directly from the 0.5 to the exact penny. And by the way, I shorted that, but I took profit way too early. So now, if you're looking at one last impulse, a 1, 2, 3, 4, 5 to come down and take out your 19-cent lows, or at the very minimum, your wave 3 lows at 20 cents, we could be looking for massive shorts in these zones. Remember, your wave 2 short is golden pocket 786. That is 39.5 to 43 cents. So coming up here at one of these two levels, you could make a massive gain. You know, obviously you're going to play it as a scalp at first, and then or a day trade at first, and then take profit along the way. You can compound, but this thing could give you a nice super short in a wave 3 coming down to take out 20 cents. So I have alerts set on that SFP high. On this, wait, where's my alert? I'll just do it. I think I have it on one that's hidden. But yeah, that's what I'm looking for on there, guys. Now, if we don't get the SFP, we don't short it, right? Because if we come up here, we hit it, we kind of chop around in here a bit, and you don't get a clean SFP, you might just continue to break up. So I want to see the pierce above, maybe even hitting the 40 cent, and then start to lose it. And that's when you can enter the short. But we are starting to see some bear divs on the chart now. Okay, there was another one, XRP, I was going to look at. Man, XRP is just, so we had a triangle in here. We broke out of the triangle to grab liquidity, and then we got the big dump to the downside. Now, XRP is at a support level of a previous range value area low, but honestly, there's not too much here, and we're just not seeing that bullish market structure break, right? You have your lower high, lower low, lower high. It's very likely we create a lower low here. And the thing with XRP is the last two moves we saw in here, three-wave corrective moves. Very clear three-wave corrective move here. You made a lower high. That means you should be taking out that low. We take out that low, what looks like an impulsive move to the downside. The very next move up, we get three-wave corrective move, right? So now we should have the overall bias of taking out that low again. Coming down to take out that low. Now, for the last week, 2 weeks, 3 weeks, we came down to the value area low, and now we're pushing up to back test that POC. So let me zoom in here so you guys can get a better look at this. You can see we came down to the value area low. We're now pushing up, and we're trying to back test the POC and your golden pocket. We rejected from the naked daily point of control right before it. I don't like that. I would have liked to at least see us hit the golden pocket. And earlier in this week, we talked about it would be nice to actually hit that golden pocket. But unfortunately, we're seeing a rejection from the naked daily point of control. We did front run the value area low. So we could be looking at this 1, 2, 1, 2, or like a contracting diagonal of some sort, or expand. You have to look at this in an expanding diagonal, which is very rare. And then this would be a flat if you come down and take out this low. Then you could look for another move up. But XRP, honestly, it's not very tradable to me right now. I don't think, you had a decent short from this zone. And I would just be looking at coming down to the value area. You're trading this range until it breaks, right? You rejected from the value area high. You came down. You front ran the value area low. We're now bearishly backtesting. And the big thing is we're losing these highs. You can see you're losing these highs. So you're likely to come down at least to grab that low. That is at 105.24. Now, could you see an SFP of that low into value area low and then continue? Yes. Let's put on some naked dailies. Let's see what we have in here. No naked dailies down there. Do we have a naked weekly? So we do have a naked weekly that is just below the value area low. So that would be kind of your zone of support. The liquidity grab to the naked weekly. You also have a fresh daily down there as well. And the fresh weekly is down there as well. So now let's zoom in onto the 2 hour. You can see where our confluence of support is, right? It's right in here, right down. And I know it's a zone, but this is kind of your confluence of support. So for me personally on XRP, if we get one more move up and create some bear divs into this, I would look for the short. And I would look to bring it down into this box. I would at least take some profit and maybe look for a long if we had some bull divs down there. This is looking like a low time frame, left shoulder, head, right shoulder, and then you might dump and just come down right away. But you want to play that volume profile, this volume profile. So you have no edge right now. We're right in the middle of it. You have no edge. You want to either come up to POC or come down to value area low. It does have some bull divs on the daily time frame. But once again, those bull divs played out with a 3-wave move up and a lower high. The bullish case scenario, now this could play out because you do have bull divs, and let's see, I think you said weekly bull divs as well. Yeah, weekly bull divs, but that money flow looks pretty bearish. Remember, bearish money flow on Market Cipher B usually, most of the time, will overpower a single drive of bull divs. But because we do have bull divs on weekly and daily time frame, the bullish case scenario, and it's very hard to say this because, like, guys, if you're being honest with yourself, does this look like, can you count a 5-wave move in there? What are you going to say? 1, 2, 3, this itty bitty pullback is a 4, and then that's a 5. If your move up does not start with a motive wave, with an impulse, then you're likely to take out the low. So because this is far more probable to be a 3-wave corrective move, you're looking to take out that low. But in the bullish case scenario, you're looking at a double 1-2 impulse, a 1, 2, 1, 2, and then you get your 3, and then you get your 4, 5s, 4, 5s, right? So you would want this to be a 1, you'd want this to be a 2, and then you'd want to make another 1, and then another 2, and then you go up, right? Something like that. To me, it's far less probable just because of this. So yeah, I'm looking for lower on XRP, and coming down to 90 cents to 84 cents is a macro golden pocket. That more macro golden pocket pulled from the lows, the bear market lows to your all-time high. You can see your logarithmic golden pocket. Obviously, our very big support levels are down around, 70 to 68 cents and then 64 to 62 cents. There's not a lot holding you up in here. And the very concerning thing about the 618 is there's nothing really in there. I mean, you could say, okay, your range highs are close by. Your prior accumulation range highs. All right, Tau. I was going to look real quick at Tau. Yeah, I mean, you back tested, you had a kind of triangle in here. Or I wouldn't say it was a valid triangle, but you lost that trend. You back tested it, and then now you're dumping. You're very likely to take out your local low. You're very likely to take out this local low in here. But once again, guys, like, all you need to know is look at this here. There is a way to count this as a 5-wave move. A 1, 2, 3, 4, 5. Okay, if that is an impulse, did we break market structure bullishly? Yes, we did. We took out this lower high in here. Okay, so you broke market structure bullishly. You have a valid count for an impulse here. So in the bullish case scenario, you're going to retrace. You're going to take it from the low of the impulse to the high of the impulse. And you're going to want to bounce between the golden pocket and 786. Let's put on that on log scale because that is more than a 100% move. Our golden pocket has already been hit and then created a lower high. So now you're likely to come down at least to the 786. We have a daily level right on top of the 786. And that might even be a weekly, or that's a 3-day level. Hold on. Let me see if that's a weekly level. No weekly there. It's a daily level as well. So you have a daily level right on top of your 786 at 176.2. You also have the liquidity into that target. You also have the naked weekly point of control there. So that is definitely where I'd be looking for the next long. Around 176 to 183. Until that happens, though, definitely not looking for long. Look at this here. 3-wave corrective move. Okay, you get a 3-wave corrective move, you're likely to take out that low. Low or high. So it doesn't matter what happens in here, you're likely to take out that low. So we can actually set an alert because that might be a decent long position, even if it's... let me get the naked weekly. And then we'll set an alert on the SFP as well. Yeah, and obviously this is old now. We can get rid of this. We never came up there. And I would even be pulling the volume profile of this sideways range in here. Yeah, your value area low's down here as well. So to see one more kind of move down to grab that low and then get back above the value area low, that would be a very bullish sign. Okay, let me see here. Sea of red in the markets today. Bitcoin did well. Asia will probably dump. Yeah, I think that Bitcoin, it's unfortunate that we're falling back inside your volume profile of the past 6 weeks, that local 6-week range volume profile, because now that we're falling back inside the value area high of it, you could make a move all the way down. I mean, I would still look at your smaller range first, right? You want to always look at the volume levels within your smaller ranges, and then you zoom out to look at your bigger ranges. So that is your most important range right now. Even this little guy, we can just get rid of that. And that's where you're, so if you lose the low from today, you're likely to move down there. I didn't like the bear divs we were seeing. 8 hour and under was all showing bear divs pretty much. If you make $200 and make 1% a day, compound for 3 years, you'll have $10 million. Yeah, Adam, compound interest, Einstein said it was the 8th wonder of the world. And that's true. It's for a reason. Compound interest is incredible, man. And the goal as a day trader, a reasonable goal as a day trader is to make 1% a day or 5% a week. Like, you're not including weekends there, right? So maybe on Monday you make a trade that makes you 3%. And then Tuesday you lose, it's a losing day for you, but you only lost 2%. You're still up 1% on the week. Throughout the entire 5-day period, if you can be up 5% a week and then consistently do that, and you're compounding those profits back into your portfolio to grow it, you can really change your life, change your perspective and your wealth. So yeah, it's a good, I wouldn't go by the numbers, right? The actual dollar amount, like $200 a day, because if you have $1,000 portfolio, $200 a day is far more than 1% a day, right? So you have to it's based on the process, not the amount of money you make. It's based on the percentage gain per day. So yes, at first it's like this. I've shown this many times in my live streams, but it's like that slow exponential growth curve, right? And you start out with $1,000 account. You make 1% of $1,000. You're making $10 a day. Nothing, right? You compound that $10 back in. After a year, you have maybe a $3,000 to $5,000 account. You're making now $30 to $50 a day. And then, say year 2, you're up to $10,000. Now you start making 1% of $10,000 a day. Okay, you're doing pretty good, right? You're compounding that in. By year 3, year 4, that is when you're trading with $50,000, $100,000 position sizes. You're making way more money, compounding that way more money. But if you can get through this slow, arduous process, and yes, it will take longer than you want. If you're using proper risk management, it will take longer than you want. But once you start getting to that kind of pivot point where it starts going exponential, that is when you can really make very, very good lifestyle for yourself. It's not a get rich quick game though. You have to have patience. You have to have discipline. And so I would focus on making a percentage a day, not necessarily a number a day, a dollar value a day. Yeah, I remember when BitBoy was saying it wouldn't drop. I thought he said 47K, right? He was like, it's never going below 47K, and then we dumped to 15K. Yeah, Crypto Clan World, on the running flat, I think you're talking about kind of this time frame, this last push up. This would be an impulse here. And then, yes, this would be a running flat in here. And then you'd want to see another impulse up. And so this 1112 that we saw from Monday to Wednesday could just be a wave 1. We could see a wave 2, 3, 4, 5, right? So you would still want to see an impulse coming in the next few, coming weeks, next 2 weeks or so. But that doesn't mean you can't retrace in a wave 2 all the way down to the 786. Your 786 is in this green box. Earnings are creating to crack, markets are rolling over. Big drop in BTC coming. Question is when. Yeah, we do see those intermediate time frame bear divs. Actually, let me go to the 12-hour. Does the 12-hour have those bear divs? Yeah, look at 12-hour has bear divs as well. Coming up into our bigger resistance. There was 2 main resistance levels I was looking at this entire move up. You saw I only had 2 big purple boxes. Mid 65s, and then obviously taking out the liquidity of the highs. Another thing, let me show you this now that I have the bearish pitchfork on the chart. Guys, pitchfork trading is so amazing, so awesome. We hit the bottom of the pitchfork with bull divs on the daily time frame. Well, as far as pitchfork trading goes, let's say you hit and reject from the midline. We flip the lower band to support. We come up to the midline. By the way, my bias, as soon as we flip this to support here, I was expecting a move up to the midline. We rejected from the midline and saw an impulsive move down. Now, after seeing some bull divs form, we bounced from the bottom of the pitchfork. I'm talking specifically about the blue pitchfork, the bearish pitchfork. And we impulsed up to backtest the lower band. If you reject on the backtest of that lower band, it is possible to make another new low, macro low. So I said 2 main levels, because when I first pulled that box, this lower limit of the band was right at the 786. It was right at our liquidity. We also had a weekly level there and a naked weekly level there. So that's why the confluence for this mid 65s was there. If we broke above that and were able to flip it into support, then you would expect to work your way up to the upper limit of that lower pitchfork band, which would be a liquidity grab of the range highs. We also have a naked weekly point of control up there at 66.8, pretty much 66.9. And I believe there was a couple naked dailies up in that zone. And a couple naked dailies up in that zone as well. So those were the 2 main areas to look for rejections. But right now we are seeing no daily candle closes, or not even a 12-hour candle close above the pitchfork band. We're rejecting from that pitchfork band. Now, could we do something like that? Yes, we could. But it's a bad sign to see some bear divs here, to see selling or buying exhaustion here, and we're starting to reject from that pitchfork band. And it's also our channel. Remember that channel. It's your channel highs. Yeah, thank you, Crypto Wanderer. Guys, you can, when I'm not making videos or streaming, I do try to post all my updates on Telegram throughout the day. I even post on the weekends. Some weekends I'm really busy, but I try to let you guys know everything that I'm looking at. The trades I'm looking at with Bitcoin or the altcoins. When we set these alerts, like I set some alerts on Ondo, I set some alerts on Hype, Tau. When these alerts go off, if I'm not streaming, I will go into the Telegram and let you guys know, hey, I'm not going to take the trade. I don't see my confirmations, or hey, I'm taking the trade. So if you guys want those alerts, those notifications, all you have to do is join BYDFI and sign up, minimum deposit, and then you can join the Telegram, /verify and your user ID, and it will get you into the Telegram. And you guys can get those alerts when I post about those. Ondo just partnered with Japan's SBI exchange to tokenize their stocks with the yen-backed stablecoin to trade on-chain. Wow. Okay, that's why we're pumping so much on it. Baby Genius, these fundamental analysis things really do have an effect on the coin. But let's remember, there's always the hype of the initial move, and then you get some sort of pullback, right? So on Ondo, even if Ondo overall now is going to be going way higher, I'm still looking at this technical level for at least a scalp short, right? Down to the POC. And then let's say the hype continues. Let's say we just really break out of this thing and really keep going higher and higher. But if we have confirmation to short up here, I will look for a short up here. And same thing, if we come down to the POC and we see some nice bullish divergences or some local bull divs and stuff like that, or even based off the Elliott waves, 1, 2, 3, 4, 5, I would be looking for longs there as well. But thank you for that information, Baby Genius. Near, yeah, we can check Near out. Near USD. Because I know Near, I've been looking for it to come up to 211 to take out those highs. Look at, we have pretty much a triple top right now up there. We did bounce from our box here. The first time we hit into it, we front ran a naked daily point of control that was at 174.5. And if you guys remember, I said I want to hit that 174.5 naked daily and SFP the low from a Friday before seeing actual move up. You would have to zoom in on lower time frames. Let's zoom in onto the hourly. So what I don't like here, could you classify this as some sort of impulse? 1, 2, 1, 2. You got your 3, 4, 5, 4, and then you have a blow off top for your 5. You could look at this as an impulse. And then because we're coming down so far here, you would be looking at like a 3-wave corrective move, 3-wave corrective move, and then you'd want to see another 3-wave corrective move to take out those local lows at around 184. And then after that, you could see the impulse continue. But the big thing with Near is we had a larger impulse finish, right? This 5-wave move, 1, 2, 3, 4, 5. And we rejected directly from your previous range value area high and a weekly level. By the way, I took profit at exactly 308. Remember, we longed the green box. Let me, I know this chart is super messy, guys, so I'm sorry about that. Let me just hide some of this. We rejected directly from your previous range value area high and the weekly level up here, previous range value area high, to finish the impulse in a wave 5. I longed the purple or the green box at 221 because it was the back test of your previous range value area low. You can see the value area low at 221. We broke above it. We back tested it. So you expect to come to value area high of this previous range. Okay, this was 11-month long range, 11.5-month long range. But now what happened is after rejecting from the value area high, we lost it with a definite impulse to the downside. Okay, you lose it with a definite impulse to the downside. What do you get? A 3-wave corrective move up to a lower high golden pocket. That right there, the fact that this was a 3-wave corrective move that ended at a golden pocket should tell you were going to make a new low below this low. So when we came down, we hit the golden pocket, but I wanted to see some bull divs. We also didn't see bull divs down here until we hit that naked daily. We're hitting that naked daily. Now, well, we hit it and we're pushing up, but we're back below the value area low of this range. And if this impulse is done here, you could see a corrective move all the way down to the macro golden pocket, pulled from the low of the impulse to the high of the impulse. And that's at 138 to 132, which also has some volume support down there. Now, if we're looking at this being a B, C, you really wanted to come down to your 1-to-1 and your 1.236, which was in this zone. We didn't, we're bouncing right now here, but depending on this move, if we see another 3-wave corrective move to back test your previous range value area low, and we also have a new weekly level there at 221.9, that's why I have a box up here, because I will be looking to short that to continue down if we get the confirmations, right? I am still in that long, by the way, guys, from 174.5. I took a lot of profit. I think I only have like 10% of the position open. That's why I haven't been. But the next take profit, this 211.6 has been pissing me off because I've had an alert there I think it's on a hidden one forever. And I have a small TP of the rest of some of the rest of the long there, but it's just not wanting to go up there. So if we see an SFP of that double high, triple high now, you could look for a flat in here, like an impulse. Here's your flat. You would get the short from 211.6 to come down to 184. And then upon taking out 184, you might be able to make that move up. And then you would be looking at an A, B flat, C. And then you would expect to roll over from there. But tradable, what do we have that's tradable? You have this 211.6, and I will just do this again to make sure. So if we SFP 211.6, you could look for a short to bring down to 184. This one, 184. And then if, depending on what happens there, if you SFP 184, you could look to bring it up to 221.9. That's the larger corrective move, right? Because this could just be continue up right here, straight through it up to that level. So it's not guaranteed that you get the SFP of 211.6. You could have a simple zigzag, A, B, C, lower high, lower low after. Or you can have the more complex A, and then you have a flat and a B, and then you get the C. Okay, BTC starting to reject from value area low. Yeah, of that small range, I think I know what you're talking about. This upper range just right in here. So if you pull that super small range, yeah, actually we've lost it already. You rejected from the POC on the back test. And look at that, you rejected from the pitchfork band on the back test. I told you guys earlier today that I'm expecting to make a new low pretty much. New local low. Maybe we have a 1-2-1-2 from 82K, and now we're forming 4-5s on the 12-hour time frame. That is interesting. So I know what you're talking about there. And from 82K, initially I was looking at this as like a 1-2-1, and this would be a running flat and a 2, or running flat here and a 2. And then you have your big 3, 4, 5, 4, 5. You would need a new macro low. The one problem with that is obviously the time, right? Your 2s are very small in time and price compared to your 4s. It's not an invalidation though, so that is a valid scenario. That is actually a valid scenario still. But it's, I would say, less likely to play out because of that. There's a nice 5-wave count in here, and then you have a very small 2, and it pulled back to the 382. The 382 is your minimum target for a wave 2 pullback. And we did hit that 382 there. And then you rejected. So yeah, this count is still valid too that I have on my chart right now. This 1, 2, 3, 4, 5. BYDFI doesn't let you guys sign up in Taiwan. Maybe you guys can use a VPN. I'm not, I don't want to give that advice. I know that it's not required, but I know that they still offer, you can still trade with VPNs on there. Thank you for clarification, Vinehood. I wasn't sure if we could come back down that far and still have a valid running flat. If we lose, because you've already taken out the highs of your initial impulse. So like we would have to say this is a wave 1 up to, I think that was 64.6. And then this would be the running flat. So if you start to lose that low at 61,750, you couldn't still say it's a bigger flat. Sui, we have not looked at Sui. I can look at Sui. We did look at Tau already. I know these charts look disgusting right now. Sorry, guys. So Sui was trending up in this channel. We rejected pretty much from your POC. You can see here, you rejected from your POC. You lost the channel. You back tested the channel. you came down and you grabbed liquidity from the second pivot of that channel. Right? That was after hitting into the value area low in a golden pocket. That's why we had a long here, because it was value area low, golden pocket. Now, if we take this volume profile and extend it all the way, we are rejecting from the value area high. You can see 1, 2, 3 taps, rejection, and we're in the bearish backtest right now. So you want to close the daily candle above this POC, which is at 74, let's just say 749. If you close below it, it's not going to look good, and you probably are going to rotate all the way back down to sweep the liquidity of the bottom of the channel. And you're going to hit that naked weekly point of control in that daily level that was front run. Because here, this low on July 8th, we front ran the value, we front ran the weekly and the naked weekly, but we hit the golden pocket and the value area low. And the range that we're trading is just kind of this bottoming range in here. And you want to trade this bottoming range until you see a breakout or a break underneath it. Pretty clean rejection here at the value area high. And yeah, we did have bear divs, higher highs in the price action, lower highs in the momentum waves. Your money flow overall is grinding out here. You can see the bear divs on NAMI. You have very slight bear divs on money flow, but they're there. So the 4-hour gave us bear divs at the value area high. Let's see if the 8-hour did. Actually, not on Market Cipher, but NAMI did. And you even have money flow draining out. That's not bear divs, though, because you would have to go from this high. You'd have to make a higher high in order to see bear divs on money flow. But you are seeing momentum wave bear divs. So the big thing for SUI is if this is going to be a confirmed 3-wave move up, you want to take out that low at 70 cents. If you take out that low, then you're likely to take out the overall low of that move. The bullish case scenario is that you have an impulse here, a correction in a wave 2, you have another impulse here, and then you would have another correction in a wave 2, and then you would want to see that explosion up and then create some 4-5s. So let's talk about the bullish case scenario. First off, I can get rid of this channel now because it's been used up. You would want to pull your golden pocket from the lows of your wave 2 to the highs of your secondary wave 1. Golden pocket, and it's really between golden pocket 786. That's kind of your big zone. Let's see if we have any confluence in there. Let's go to the daily time frame. We do have a daily level down there. That might be a weekly level as well. Nope, and this is this week, so we're not counting this candle. Okay, so 786 is looking at least decent for support. Let's see if we have any naked weeklies down there. No naked weeklies. We still have that fresh one that's at 69 cents. And we don't even have any naked dailies down there. Man. So really, if you're a bull, you're hoping you bounce around that 72-cent zone. If not, you're very likely to take out the lows at 69.5, and you're going to come at least down to 69. But 69 is a daily level right on top of a naked weekly point of control. And I would look for at least a scalp long from that opportunity. What you would probably want to do is after you're coming down here, you'd want to bounce from it. And then I would long as soon as I started to get back above the value area low. So my long would be from actually 69.5. My stop would go below that bounce target at 69. And I would be targeting around the POC. You would pull a golden pocket too. And then you would be targeting that, but that's still a decent scalp trade, right? 7 to 1 risk reward ratio. Overall, on higher time frames on SUI, I am pretty bullish on SUI because look we're coming down to the bottom of a macro pitchfork. And what do we want to see down here, guys? We want to see that accumulation. Tap 1 in here. By the way, we long that green box. Tap 2 in here. And then even if we break this down in an A, B, C, hold on, let me make this a little bit clearer for you guys. I'm sorry about all the junk on the charts. But you can see we're at the bottom of a macro pitchfork, and you want to see that left shoulder, head, right shoulder in here, right? So with this move, A, B, C, if you come down and you take out 69 cents, and even there's a weekly down at 67.95, that zone is your zone where you could see a swing long opportunity. Because look at, you had the bull divs on the chart. You had the bull divs on the chart. Now we have a low here at 69.5, and NAMI is quicker, right? So if we do come down and even bounce from 69 or 68, you would see another drive of bull divs formed on the daily between these two lows. And that would give you your right shoulder. And then this thing could break up, because we also have weekly bull divs on SUI. Bull divs on the weekly, bull divs on the weekly. At the bottom of a macro pitchfork, right? In this pitchfork, yes, you did see a bit of a weekly distribution up here, but you've been distributing. I'll set an alert on the daily. Like the dailies, the golden pocket at 72, you could bounce from there because you have the low from earlier today. You could see an SFP of earlier today's low into that golden pocket. But for me, the daily in the 786 is just a little bit better. And let's see here. Yeah. Yeah, I love divs too. I've noticed you have figured out the market, Divine Hood. I appreciate you helping others. Well, thank you, Adam, so much for that kind comment. I've figured out, I would say figured out some of it, definitely not all of it. And I definitely make my mistakes. And I definitely see, that's the great thing about being a trader, guys. You're never going to be right 100% of the time. If you find a trader that tells you they win every trade, run the other way, because they're lying to you, because all the probabilities can be in your favor and it can still go against you. But that's why risk management is important, right? That's why you want to take 1 to 3 risk to reward ratios. And by the way, if you guys don't know how to do risk to reward ratio, I can show you real quickly here. Okay. A good example of this, I'll use the short on BTC I took from $65,200, right? So we came up, we hit the liquidity level at 65,550, and then we started to lose the golden pocket. Now, how do I enter this trade? How do you calculate your position size? So, oops, I don't want to do that. I want to hide it. All right. I'm going to say, I'm just going to give a random portfolio of $1,000. Let's say you have $1,000 portfolio. Okay. You're risking 1% on this short trade. We're going to risk 1% on this short trade. So I shorted as soon as I started losing the purple box, because we were at resistance with bear divs. So we had the confirmation to enter the short. You had a double top here, not a clean SFP. That's why I didn't get in exactly at the 65,550, but I wanted to take a short here because I saw confirmation. So I shorted at like around 65.2. My stop goes above that high, and I'm looking to come down to the value area low of the small range, of the 11-day range, or the daily level. Let's just say the daily level, right? So right away, you don't want to take the trade unless it's like a 1 to 3 risk to reward ratio. Remember, guys, you can lose 70% of your trades, your win rate. You can lose 70% and only win 30%. As long as you're taking a risk to reward ratio of 1 to 3 or greater, you can literally lose more. You can lose half of them and still be very profitable. So if you're taking a 1 to 3 risk to reward ratio or greater, you can actually lose more than you win and still be profitable. So this is an 8 to 1 risk to reward ratio. Or if I say, okay, you know what? I wanted to take it only down to the POC we just hit today. That's still a 4 to 1 risk to reward ratio, right? You could take a TP1 at that POC and then move your stop to break even. You have a risk-free trade. But let's just say I'm bringing it down to this daily, right? So an 8 to almost a 9 to 1 risk to reward ratio, but your position size is calculated based off this stop loss percentage. So we have $1,000 account, right? And we're risking 1%. Well, 1% of $1,000 is just $10. $10 is not your position size, but it's what's you're risking if you get stopped out. If you get stopped out and lose this trade, you'll lose $10. So we're risking $10. That's 1%. We're going to divide that by this stop loss percentage number. But because it's in a percentage, you got to move the decimal over 2 spots. So we're going to divide it by 0.00519. So divided by 0.00519. Okay, that means I can put $1,926 position size on this short trade. And if I get stopped out, I'm going to lose $10. If I win it, I'm going to win, 8.5 times that much. Or, I'm going to win 8. You're risking $1 to make $8, right? Or risking $1 to make $8.77. So that's your position size you would put on the thing, on the trade. But you're gonna say, wait, Divine Hood, you told me I only have a $1,000 account. How am I gonna put $1,926 on the account? This is where leverage comes into play. Leverage is not a tool if you have $1,000 to short a $10,000 position. Leverage is a tool to free up margin or to supply margin in order to take a trade. So what you would do is you would crank up your leverage to 2x. Now you have $2,000 in your account. 1,000 of it is your own money. 1,000 of it you're borrowing from the exchange. Or you could crank it up to 10x. You have $9,000 you're borrowing from the exchange and 1,000 is your own money. Let's say we crank it up to 10x leverage. You throw $1,900 and $1,926 on the trade. Okay. Now you have almost $8,000 left to enter other trades on altcoins, enter hedge positions right now, whatever it is, you can enter other positions because you have margin free in your account. Let's say we only do 2x. Now almost all of our entire portfolio is tied up in one trade, but you can take the trade, and even though you're on 2x leverage instead of 1x leverage, if you get stopped out, you will still only lose $10. So risk management really is in calculating your position size based off of this number. Now let's give a different example here. Let's give an example of let's say I shorted the Primo top, right? The SFP at 65.5. And I'm looking to put a stop above the next swing high, right? But I'm also looking to come down and take out the 57K low because I think we're going to reject here. I think we're going to follow that channel, right? Top of the channel, bottom of the channel, top of the channel, and we go down to the bottom of the channel. Remember that selling exhaustion channel in here. Okay. So now I have a 2.72% stop loss, right? So what I would do is we're still using $1,000 portfolio. We're still risking 1%. So we're still risking $10. If we get stopped out, we'll only lose $10. But now I have to divide that by, you move the decimal over 1, 2. So 0.0272. So $10 divided by 0.0272. Now I can only put $367 on the trade. And if I get stopped out, I'm going to lose $10. And if I win, I'll win 4.5 times, that amount. So risk management really, really is key, guys. And that's why a lot of people say, oh, shoot, I wanted to short this box here. I missed it. And I say, well, just get in on a lower high. Like get in on a lower high. It's about your stop loss percentage. So we make a dump here, right? Let's just zoom in now. You didn't get in at the purple box, but you still want to short. Well, look here's your lows, right? So if you break these lows, you're breaking market structure bearishly. Okay, so you break the lows, now you broke market structure bearishly. Now you're going to look to short on a lower high. And let's say here, okay, I'm going to short the back test of the pitchfork. The stop is going to go right above that little itty bitty high right above. Okay, and I'm only going to target taking out the local lows below us. Well, first of all, that trade right there is a 9-to-1 risk to reward ratio. It's bigger. It's a bigger risk to reward ratio than the trade that I took, right? Up here where you short this, your stop goes above this high, and I'm targeting way lower. You see, this is a much smaller move here, right? But your risk to reward ratio is better, but also look at your stop loss on this. It's a 0.18%. So let's go to the calculator. We have $10 divided by 0.0018. You can actually throw $5,555 on the trade And if you get stopped out, you're going to lose $10. So this trade actually is a much more profitable trade than this trade, even though it's a smaller move. It's because your stop loss is so tight. So that's why, guys, the catching the absolute primo top or primo bottom doesn't matter. It's about where you can get in safely and make your stop as tight as it can be. And then you can TP and de-risk right away, right? Like if we take out these lows. Now I could leave this thing open till down here, and then all of a sudden it gets to a super nice trade. I remember when the ceasefire first happened. It was a Tuesday, I believe. And Trump tweeted about the 14-day ceasefire. Where was that? That was somewhere in... I think it was in here, guys. It was somewhere in here with the 14-day ceasefire. We were live streaming, and a few people in the chat wanted to do micro time frame scalping. And so I was zoomed in here, and I got a long position. We were looking for the back test of this pitchfork band, and we longed with like a 0.01% stop loss. And I was just looking to take it up to break the local high, but then Trump tweeted about it. So I had a huge position size because my stop loss was so tight. And then when Trump tweeted and it pumped like crazy, I made so much more money than I thought I was on that scalp trade because my stop loss was so tight that my position size was so big. And, you know, so it really, guys, it's about your stop loss. And I'm sorry, I know I spent a lot of time on this. I know I'm harping, but it is really one of the most important things to understand. Yeah, and the markets will always be here. You can always find another trade, guys. Awesome. No, that's so cool to hear. Since you started following and joining the Telegram, I've improved a lot. Also, my risk management improved. Well, thank you, No, and God bless you as well, man. I love to hear that. I actually really, really do love to hear that because trust me, I have liquidated more accounts at the beginning than I can count because I just would not. I was stubborn, right? You're stubborn. And what happens is you get this ego, right? You win 15 trades in a row. And then you're saying, why am I risking 1 to 3% per trade when I won 15 in a row? You know what? I'm going to risk 5 to 10%. And then you win a few trades at 5 to 10%. You know what? I'm going to risk 20% of my portfolio in one trade. And then you win 3 of those. And then the fourth one you lose, and you lose 20% of your entire portfolio because you lost that trade. So that's why it is a slow, arduous process. 1 to 3%. It's going to be slow. It's going to be boring. It's going to be frustrating. But if you can have that discipline, once you start to get up here, once you're trading about a $200,000 position size or more, you're making, you know, $1,000, $2,000 a day. Like, guys, it's a slow process, but it's about getting the process down and it's about getting the risk management down. Once that occurs, then you're set. You can trade Bitcoin, you can trade gold, you can trade S&P 500, you know, whatever it is. Yeah, pulling the trigger is tough, man. And I get that because you come up here, you double top. You know, I didn't pull the trigger right away. I waited till we lost the box, but you have confirmation, so you should at least have a little bit more peace of mind to pull the trigger. And the sooner you do pull the trigger, the tighter that stop loss can be. And that means your position size can be bigger. Remember, whether you pull the trigger right away here or if you wait till you lose this here, if your stop is above that high, your position size is going to be different. But whether you pull the trigger sooner or later, you're going to still lose 1% if you get stopped out on that high. So it's about if you can get that confidence to pull the trigger sooner, you can make a bigger position size. And yes, that is something you will have to wrestle with. Like that is something that just comes from experience. I don't think the only thing that can teach you that is experience in the market. Man, Bitcoin's doing nothing, guys. Bitcoin's doing nothing. Oh shoot, I do got to get going soon too. Let's see. Do any of you guys want to cover any altcoins that you guys posted that I missed? Let me know in the chat. Also, please do hit the like button, guys. Please do subscribe to the channel. Let's see. Yeah, I mean, we're holding on to the POC barely, which is kind of a good sign. Look at all these wicks that are keep coming in here. We're seeing buyers try to defend that POC. Actually, let me just do this. Yeah, but right now, guys, we are seeing bearish absorption here. So check this out. Lower highs in the price action here, higher highs in the CVD here on an increase in open interest. So we're seeing local bearish absorption. We could pull a golden pocket from that high to that low. And if we lose, we got to be careful from rejecting from around 64,160 to about 64,2. But because we're seeing bearish absorption, yes, we could pump very locally right now, but the bearish absorption might end up playing out where we continue to dump to the downside. But for about the past hour, 2 hours, we're creating some bearish absorption here. And what bearish absorption is a lot of people are entering longs, but price is not able to break highs. So we have limit orders that are absorbing those long positions. And eventually they are used as fuel to push you down. As soon as they start to get stopped out, it's like a fuel for a long squeeze to the downside. So I would be careful with that. Any longs right now, guys. We're almost making bearish absorption from the high. Definitely we're creating lower highs in the price action. We're creating about equal highs right now in the CVD. But if this CVD continues to grind up here and you're overall increasing here, that's going to be bearish absorption. So even if we break above this high, we have local bearish absorption happening here, but we even have some more regional bearish absorption that could be forming. Let's say we do come up to the VWAP, we break that high, we SFP that high into VWAP, you could still see that move down. Because it's, yeah, the absorption that we're seeing on the charts. Okay, let's see here. Compounding small wins over time really opened my eyes about not trying to do these 2 to 5X's. Yeah, man. And learning, like one of the big things about trading too is learning to give what the market will, to take what the market will give you, right? There is so much, like I longed 58.2, the back tested the golden pocket here. I took profit at 63.4 up here because it was a 63.5, 63.4 because it was a POC resistance and a golden pocket resistance. And then I moved my stop loss to break even. But I knew that it was probably going to come up to 65. But I took some profit off the table in this area because I wanted to make sure it was going to be a winner. And because I took 50% of the trade out here, it did eventually come up to where I wanted it to, where I expected it to. I made less money on the trade. But you're not going to catch the absolute, you're not going to get the full trade every time. Or if you do, the times you get it, it will play out nicely, but you'll also round trip a lot or end up losing some of trades that you were initially up in profit on. So it's always good to take some profit to move your stop loss to break even. First of all, as far as psychology wise, that takes a lot off your shoulders. It makes it a risk-free trade. That way you're not stressing out over the charts. And learning to give what the market will, learning to take what the market will give you. You know, I took another take profit up here, by the way, because even though I think we could still come up to 67.2, 67.3, but I wanted to secure some more profit. I also shorted here knowing that we could continue up as a hedge because I'm long from down here initially. I still want to have a short in just in case we roll over and that the rest of this gets stopped out. At least I'll be in massive profit here. Okay, let's see. 4-hour money flow dipping red. Yeah. 4-hour looked pretty bad, guys. Look at this. One high, two highs, at least on Coinbase, or a double top on most exchanges. 3 highs here. Bearish divergences. Money flow draining out, just crossing into the red. Markets, NAMI, bearish divs, money flow, bear divs. Crossing into the red. I mean, it was likely we were at least going to see a small pullback from here. The very, very bullish case scenario is that we are going to end up holding this POC and we're going to continue up. Even still a relatively bullish case is coming down to 62.5 and then, you know, you make that wave 3, right? So a wave 1, wave 2, 3. Now this wave 2, let's just talk about that. That wave 2, let's take our trend-based Fibonacci time. We'll go from the low of the impulse on Monday to the high of the impulse on Wednesday. And you want that low to be made after the 0.382. So actually, it was, right? It was made at the 0.5 fib time. We have a low that was made after the 0.382 fib time. So as far as time-wise goes, today's low could be the low. Let's also look at our Fibonacci retracement. The 382 acts as strong support in a strong uptrend, strong resistance in a strong downtrend. Strong trend 382. Okay, well, we know that it's trying, right? So we made the low after the 382 time at the 382. The 382 is strong support in a strong trend. This trend for the last 2 days has been a strong trend. So there is a real chance we could hold and continue to move up. I might even take a little bit of profit here on that short from 65.2. I'd probably only take out about 10% or 15% to cover fees. And I'll leave my stop loss above that high. I have to think about that. Yeah, I think we could see 70K before the overall lows, before 57.7 is taken out. I do think we could see 70K. Remember, even if this is an overall A, B, C, that target was around 70K. $69 to 71 is your target. Minimum target. Well, minimum is taking out the A wave highs, which we've done. But like as far as fib minimum targets, your 618 is generally your minimum target, which is at 66,240. But we'll just keep an eye on this, guys. What's important about today is you've tried to break out of the value area high. You chopped around with bear divs right into resistance. You fell back inside of it. You back tested it bearishly. And so far, we're trying to reject. We're not quite rejecting. If we lose the POC today, look at on the 4-hour time frame. There's been no candle body closes below the POC. So the first 4-hour candle body close we see below the POC is going to be a bearish sign. That means the bulls were trying to hold up here. They couldn't. They failed. And guess what? You're going to get that move down. So I would really watch the 4-hour candles. We have 2.5 hours left in this candle. Let's see our 2-hour candles. Do we have any? Yeah, so we have some 2-hour candle body closes below. I would really be watching that 4-hour candle. If you close a 4-hour candle below 61.1, then or 64.1, excuse me, you're going to see a bigger move down. And yeah, we saw the bear divs, guys. We saw the bear divs coming into this resistance box. No, thank you, man. Thank you for the kind comments and the support. And I'm sorry about the time zone difference and the sleep difference. Yeah, that sucks. Yeah, Jason's fees, I think he has KSEX has really, really good fees. But guys, I do got to get going here. I've got a few things to do for the rest of the day. I will be live streaming tomorrow at 3 p.m. Eastern Standard Time. Let's go through the alts again. Let's go through, if any of the alerts go off in the meantime, I will let you guys know in the Telegram. For Bitcoin, we're really going to be watching the daily candle close above or below our POC, our 6-week range POC. So pull a volume profile from June 3rd. From like this low right in here, June 3rd over. That POC right there. And Coinbase, it is higher than Bybit. Bybit's at 62.6. You can see that same volume profile on Bybit. It's at 62.6 or 62.5, let's say. But that also should tell you if we lose the Coinbase POC, you're probably going to rapidly come down to the Bybit POC. So for me, I follow Coinbase volume levels the most. They've done me the best in my trading. If we lose and close the daily candle below 63, well, the lows, yeah, pretty much 63.8, then it's likely we are going to come down to 62.5. Also, we don't really want to close our daily candle below the value area high, which is at 64.5, 60 or 64.6, let's say. But thank you guys. Please do smash the like button on your way out. I will see you guys all tomorrow.